Bitcoin gets all the headlines. But there's a second crypto that might be even more important to the future of the internet itself, and most people who own it still can't explain what it actually does. It's called Ethereum. It's not just a coin, it's a platform that thousands of apps, billions of dollars, and even major banks are quietly being built on top of. Today, I'll explain exactly what Ethereum is, how it works, everything you actually need to know as an investor, and then I'll give you my honest take on where I think it's headed and what has to happen for it to win. Let's get into it. So, what is Ethereum? Simplest way to think about it. If Bitcoin is digital gold, money you hold, Ethereum is more like a giant shared computer that anyone in the world can use and nobody owns. People call it the world computer. On top of it, developers build apps that run exactly as programmed, with no company in the middle. These are called smart contracts, little programs that automatically do what they're told. Send money when conditions are met, run a lending service, power a game, whatever. And just like a computer needs electricity, Ethereum needs fuel to run those programs. That fuel is the Ethereum token. Every action on the network is paid for in Ethereum. So Ethereum isn't just something you speculate on, it's the gas that powers the entire machine. Keep that in mind because it's central to why Ethereum might have value at all. Now, how does this giant shared computer stay secure without a company running it? The answer is something called proof of stake. Instead of one boss, thousands of people around the world lock up their Ethereum as a kind of security deposit, and in return get to help run the network and earn rewards, currently around 3 to 4% a year. This is called staking. Play by the rules, you earn, try to cheat, and you lose your stake. Today, roughly a third of all Ethereum is locked up like this. That matters for two reasons. First, it secures the network with real money on the line. Second, and pay attention here as an investor, when a third of the supply is locked away earning yield, there's a lot less Ethereum floating around to actually sell. And here's where 2026 gets really interesting. For years, Ethereum had one big problem. When it got popular, it got slow and expensive. A simple transaction could cost $50 in fees. The fix that's now reshaping everything is called Layer 2. Think of Ethereum's main network as a court system that's extremely secure but slow. Layer 2s are like fast local offices that handle the everyday work cheaply, then send a summary back to the main court for final approval. Recent upgrades cut Layer 2 fees by as much as 90 to 99%. The result is a huge shift. Regular users now do most of their activity on Layer 2s, while Ethereum's main chain has become the secure settlement layer underneath it all, the foundation everything else trusts. This is the single most important thing to understand about Ethereum today. It's also the heart of the big debate I'll get to in a second. So what's actually pulling money into Ethereum right now? A few big forces. First, institutions. Spot Ethereum ETFs let big investors buy Ethereum through normal brokerages, and newer versions even pass on the staking yield, so they earn that 3 to 4% too. Second, Ethereum has quietly become the backbone for digital dollars. Over $150 billion in stablecoins live on Ethereum, used for real payments and settlement, not just speculation. Big institutions are also using it to put real-world assets like bonds and funds onto the blockchain. Third, supply is tightening. Ethereum held on exchanges is near decade lows, meaning less is available to sell. Put simply, Ethereum is increasingly being used as financial plumbing, not just a casino chip. Okay, now my honest take, and remember this is my opinion, not a prediction. The way I see it, Ethereum's future comes down to one core question. Does it actually capture value from all the activity built on top of it? Here's the bull case as I see it. If Layer 2s keep growing but keep paying fees and settling on Ethereum's main chain, then Ethereum wins, because every one of those transactions still needs Ethereum underneath, and that demand flows back to Ethereum. If institutions keep adopting staking ETFs, Ethereum wins again, because more supply gets locked up, earning yield while demand rises. And if Ethereum stays the default home for stablecoins and tokenized assets, it becomes critical financial infrastructure that's very hard to replace. In that world, I think Ethereum doesn't just survive, it becomes the settlement layer of the new financial internet. But, and this is the part hype channels skip, there's a real bear case. If those Layer 2s figure out how to capture all the value themselves and stop meaningfully paying Ethereum, then Ethereum could become like a highway everyone drives on, but nobody pays a toll for. If faster competitors like Solana keep pulling users and developers away, Ethereum's lead shrinks. And if too much staking concentrates in a few big providers, that's a real centralization risk for a network whose whole pitch is decentralization. So the thing I'm actually watching isn't the price, it's whether Ethereum keeps proving that activity. On top of it turns into real demand for Ethereum itself. That's the whole ball game. So where does that leave the price? As always, the forecasts are all over the map, which should tell you to take every single one with a grain of salt. Ethereum is trading well below its prior all-time high, so for this upcoming cycle, conservative analysts see a range of roughly 4,000 to 6,000. The bulls, including some big names, argue for 7,500 and up if ETF and staking demand really take off, with a few calling for 5 figures. The bears point to that value capture problem and macro headwinds that could keep it stuck. Notice they're all really arguing about the same thing. Does demand for Ethereum itself actually grow? Everything comes back to that. So here's Ethereum in a nutshell. It's a world computer powered by the Ethereum token, secured by staking, scaled by layer 2s, and increasingly used as the settlement layer for digital money and real-world assets. The bull case is that it becomes essential financial infrastructure. The bear case is that it builds the value and lets others capture it. Both are genuinely possible. And the honest reminder, because this is an investing channel, not a hype channel, Ethereum is volatile and it can drop hard. Nothing here is financial advice. Do your own research and never invest more than you can afford to lose. If this gave you a real understanding of Ethereum, not just hype, hit subscribe. I break down a different coin every week, always with my honest take and the risks included. I'll see you in the next one.